Federal Reserve Chair Jerome Powell and former President Donald Trump have long been central figures in the American economic landscape. Their approaches, however, are fundamentally different. Powell's explicit, measured approach contrasts sharply with Trump's unpredictable and often transactional strategies. As the global economy continues to grapple with uncertainty, these two key figures' policies and pronouncements shape the financial markets and broader economic sentiment in profound ways. While Powell's Federal Reserve takes a data-driven approach, carefully analyzing economic indicators before making decisions, Trump's tariff policies introduce volatility, leaving markets and businesses guessing about the future. Powell's measured approach, a commitment to data and stability. Jerome Powell, as the chairman of the Federal Reserve, has consistently advocated for a cautious, measured approach to monetary policy. His primary objective is to maintain stable prices and maximize employment. Fulfilling the Fed's dual mandate, Powell has often emphasized that the Federal Reserve has the flexibility to wait and respond accordingly, based on the evolving economic outlook. This approach allows the Fed to keep its monetary policy powder dry, ensuring that it can take appropriate action when necessary, without reacting hastily to short-term market fluctuations. When addressing economic concerns, Powell is explicit. In his communication, he reassures the public and financial markets that the Federal Reserve remains vigilant, monitoring key economic indicators, including inflation, employment rates, and consumer spending. The Fed's ability to wait is crucial in times of economic uncertainty, as premature action can have unintended consequences. Powell's explicit communication style provides a level of predictability that financial markets appreciate, even if they don't always agree with the Fed's decisions. Trump's unpredictability, a market wildcard in stark contrast. Former President Donald Trump's economic policies, particularly his approach to tariffs, have introduced a high degree of unpredictability into financial markets. When a sympathetic business journalist recently asked him to offer clarity on his tariff policies, Trump scoffed at the notion that the stock market's decline was a concern. His dismissive attitude toward market fluctuations and his willingness to impose new tariffs with little warning have created significant uncertainty for businesses and investors alike. Trump's approach to tariffs has been both steadfast in principle and transactional in practice. While he has maintained a strong stance on imposing tariffs to protect American industries, he has also been willing to negotiate, offering temporary reprieves to certain trade partners, such as Mexico and Canada. However, his ongoing trade disputes with Europe and other nations have exacerbated economic uncertainty. The unpredictable nature of Trump's tariff policy has created a conceptual traffic jam of economic paralysis, affecting consumer sentiment and corporate decision-making. The impact of tariff uncertainty on the economy. The greatest challenge posed by Trump's tariff policy is not just the tariffs themselves, but the uncertainty surrounding their implementation. Businesses dislike tariffs because they increase costs and disrupt supply chains. However, what they hate even more is uncertainty. The unpredictability of tariff imposition makes it difficult for companies to plan for the future, leading to hesitancy in investment, hiring, and expansion. For businesses that rely on international trade, the constant threat of new tariffs creates a challenging operating environment. Companies must decide whether to absorb higher costs, pass them on to consumers, or seek alternative supply chain solutions, all without knowing what new policies may emerge in the coming weeks or months. This uncertainty stifles economic growth and can lead to market volatility as investors struggle to interpret the administration's long-term strategy. The Federal Reserve's dilemma: interpreting fluctuating economic data. While Trump's tariff policy introduces uncertainty, the Federal Reserve must make sense of fluctuating economic data to determine its monetary policy approach. Recent inflation data revealed that price increases slowed in February, but economists remain cautious about the long-term implications. Some experts warn that tariffs could have inflationary effects, further complicating the Fed's decision-making. Thursday's inflation data is backward-looking, and the real worry is the inflationary effects that may come from tariffs, which is a wild card for markets and the Federal Reserve, said Paul Stanley, Chief Investment Officer at Granite Bay Wealth Management. It's too early to tell what tariffs mean for inflation because we don't yet know the extent of the tariffs, or if the administration will end up reversing course and adopting a more dovish tariff policy. If the uncertainty surrounding tariffs persists indefinitely, it becomes increasingly difficult for the Federal Reserve to justify interest rate cuts. Monetary policy decisions depend on a clear economic outlook, and if the administration continues to introduce unpredictable trade policies, the Fed may be forced to maintain a wait-and-see approach. The ripple effects of the waiting game. The economics waiting game has significant ripple effects across financial markets and the broader economy. Wall Street has struggled to reconcile the short-term impact of Trump's pronouncements with their potential longer-term consequences. While some policy moves may trigger stock market sell-offs in the immediate term, they could ultimately benefit corporate profits later on. This dynamic makes it challenging for investors to develop long-term strategies and assess risk accurately. If the Fed makes monetary policy decisions based on policies enacted today, they could make substantial cuts to interest rates in 2025, said Bill Adams, chief economist for Comerica Bank. On the other hand, if they assume that the overall fiscal stance will be more supportive of growth, after factoring in decisions likely to be made later in the year, they may reduce rates only a little, if at all. In 2025, the Federal Reserve's approach to monetary policy is relatively predictable, given its clear dual mandate. However, the broader economic landscape under Trump's tariff policies remains uncertain. Investors, businesses, and consumers must navigate this uncertainty, balancing immediate challenges with potential long-term benefits. The psychological impact of economic uncertainty beyond the tangible effects of tariffs and monetary policy decisions. Economic uncertainty also has psychological implications. Uncertainty breeds caution, leading consumers to reduce spending and businesses to delay investments. This can create a self-fulfilling cycle of slower economic growth. Even in the absence of direct negative economic shocks, Trump's unpredictable tariff policy contributes to this uncertainty as businesses and investors struggle to anticipate the next move. Meanwhile, Powell's measured approach provides some reassurance, but it does not eliminate the broader concerns surrounding trade policy. The contrast between these two leaders' approaches highlights the complex interplay between fiscal and monetary policy in shaping economic outcomes. Conclusion: a future defined by uncertainty and adaptation as the U.S. economy continues to evolve. The contrasting approaches of Jerome Powell and Donald Trump will remain central to economic discourse. Powell's explicit communication and data-driven decision-making provide stability, but the Federal Reserve's ability to act is limited by the broader economic landscape. Meanwhile, Trump's unpredictable tariff policy introduces volatility, forcing businesses and investors to adapt to an ever-changing environment. The only certainty in today's economic climate is uncertainty itself. Businesses, investors, and policymakers must navigate this complex landscape, balancing short-term challenges with long-term opportunities. Whether through careful monetary policy adjustments or strategic business decisions, adaptability will be key to thriving in an unpredictable economic environment. As Powell waits for clarity and Trump continues to shape economic policy with his distinctive style, the world watches, hoping for stability in an era defined by change.